Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello, Canadian MJ friends. Certainly know you're doing well. It's been a fantastic week. Congrats again to the Bulls. We've got a lot of FOMO and a lot of hype. It honestly reminds me of the cryptocurrency space back in 2017. Obviously, there's a lot of different things in this sector compared to back then, and the run is nowhere near as significant. But just in terms of the emotions and how everybody is rushing in to these stocks at this point, it's very notable in terms of the amount of strength we're seeing in the short term. So I'm going to talk a little bit about the sector as a whole, then going to go into these individual names, signals that we can be looking for to indicate when the consolidation is finally going to come, how much consolidation we can be looking for, things like that. So first off, there's a lot of bull cases in this sector at this point. It's definitely a very good looking investment and definitely very favoring the bulls. But there's one thing that I always do is I avoid groupthink, and I always look to, number one, worst case scenarios and situations that could play out that aren't as I anticipate. So because otherwise we're just putting our heads in the sand and hoping things all go according to plan. So yes, there is a vast majority of bullish things that are going to be happening in the sector over the next few years. And I'm really looking forward to when the U.S. gets involved with the federal laws shifting. I do believe a lot of these companies are going to be flush with cash and positioned really well to start pouncing on that opportunity, and they're only going to go up in value. And there's also going to be, of course, a bunch of individual U.S. names, and that's going to open the floodgates wide open for these major companies to continue making these large investments. With that, we're going to get more ETFs for the sector. We're going to get leveraged ETFs. We're going to get 3 times bull and 3 times bear leveraged ETFs to trade the MJ sector. It's only a matter of time before that happens. I'm very excited for when that happens. It's going to continue giving us opportunity for trading. We have real numbers coming out in 2019 to be looking for. So obviously, there's a lot of things bullish. The market's at all-time highs, the S&P 500. We're in a state of euphoria right now in the overall stock market, and in my opinion, that is definitely a factor here for the Canadian MJ sector. So the 2 out of the last 3 times WEED has been at all-time highs has been when the S&P 500 has been at all-time highs as well. And I don't believe that's a coincidence at all. You know, I'm on the screen way too much, but in any given week, I'm watching SPY and WEED trading next to each other 5.5 hours every day. So I have a very good grasp on how they react to each other and how they relate. The short-term correlations certainly come and go, but in terms of the general perspective of the market euphoria and, you know, absolutely nothing to worry about for these market bulls, I do believe that has a significant impact. If SPY right now were in a daily and weekly downtrend, we would not be seeing Canadian MJ with this kind of significant move. We would see a significant move, no doubt, but I don't think it would be to this magnitude. So that's something to be aware of. You know, the market right now, the S&P 500 is all bull. It's been doing nothing but going up for 10 years. It's been doing nothing but going up since Trump was elected. 2 years, how long ago was that? Almost 2 years ago. So the bottom line is, we have to be aware that if the market shifts and if we enter an inevitable downtrend, which will happen at some point, that is going to affect these companies. And we have to be aware that the prices and the value of these companies are going to fluctuate, having nothing to do with the underlying fundamentals of those companies. So right now, if the S&P 500 drops 10% in the next 2 weeks, which happened in February, I do believe that WED would be significantly affected by that. Would we still be in an uptrend on the weekly chart? Probably. But it's just something to be aware of, that the overall market and the overall sentiment of traders and investors and institutions is absolutely something that we need to factor in to the bigger picture. I also believe that there's going to be an MJ bubble coming, and I don't think we're near it. But, you know, once this euphoria kicks into maximum mode, when we do potentially, maybe when the U.S. gets involved, whenever that's going to be, we are going to reach valuations that don't make sense for these companies. Some people are already saying that for some of these companies. That may be the case. I'm not one to trade on valuations because of the amount of times that I've seen hype and momentum and emotion throw evaluations out the window. So I've seen scam U.S. penny stocks go to $500 million market cap, knowing that they're never ever going to be profitable and that their revenue is never going to be anything significant. So I don't trade based on those metrics, but I do know that if we're in blue sky breakout mode and everybody's rushing to get in and institutions are rushing to get in, we get to these valuations that do not make sense for these companies. And that's what happened in cryptocurrency. Again, obviously it's a different space. There's, the argument is that there's no tangible earnings or assets or revenue. That's absolutely a fine argument to make. But my point is that I do believe we will reach a peak at some point in the next couple of years. And I do believe that we will then enter a longer term weekly downtrend for months and months after that. Again, I'm just laying out the scenarios of what I am anticipating to happen in the next few years and things that I'm going to be a bit cautious of. So let's get into the actual technicals. We had a brief pause and it looked like we were starting to slow down with momentum on Thursday. And then this article comes out on Friday and it gives the bulls an extra set of legs, extra momentum. And specifically APH, because APH does have connections in the alcohol world, and a lot of people are anticipating, again, it's the same rumor that was previously causing APH to see some upside, and it's just back in full force now, especially with the Constellation big up in the investment in Canopy. So there's other companies that are going to get involved. This is not just going to be, solely the alcohol company space. The pharmaceutical company or the sector better get, their game together and establish some kind of way to get a piece of the pie. So in my opinion, we are now seeing all of these names price in investments because we're seeing this run up, obviously because of WEED's run up. The correlation is there, but you have to keep in mind, you can't say to yourself, well, when Canopy got this investment, WEED went up X%. So if APH gets this investment, it's going to go up the same amount because this is right now pricing in the potential for an investment. Do I think we're going to go up if we get news that there is an investment from an alcohol company in APH? Yes, absolutely, but not nearly as much as WEED because this is the market pricing that in, and it's doing so for all of these companies. Cron is being priced in right now for the likelihood that we are going to see outside investment into the company. So keep that in mind in terms of tampering expectations to a certain degree. Again, yes, we will see bullish reactions, but no, it will not be as significant because we already are seeing a significant bullish reaction to investment in this sector. So let's get into the daily time frame. Obviously, the bulls are in full control. We've been seeing action that makes technical analysis a little bit less useful. And why I say that is because there's instances where we will break support, but it's very clear, in my opinion, that institutions are using algos to trade and load up shares that are responding to some of these technical signals because when the 5-minute RSI hits oversold, we see extremely aggressive buying. And even down, we have traders that are using the 1 and the 2-minute RSI getting oversold to be an indication to buy. And every time we dip down to those RSI levels, the bulls buy the dip very aggressively. So time and time again, we see action that is just not normal in the sense that you don't anticipate to break the low of the day on a stock and then see V-shaped recoveries back to higher highs. It's just not a common occurrence. So when I see things, I watch these patterns all the time for almost a decade at this point. And when I see things that I say, that's not the usual way this pattern plays out. If the pattern plays out a certain way 80% of the time and then it doesn't, I'm saying to myself, okay, there's something going on there. And the very obvious answer here is that it's institutional buying and there's hundreds of millions of dollars pouring into the space. So the bear signals are getting no follow through and the bear signals are being used by the bulls to just aggressively buy. So we have to keep that in mind that there are definitely plenty of fake outs on this pullback. And the pullback hasn't even really started yet at this point. So I'm looking for changes in trend on the hourly time frame. And the only real time that we've gotten these changes in trend on the hourly chart there was one time that we got it here on the initial gap up open, and then we saw the continuation. But other than that, the only time it's happening is first thing in the morning. And we see this pattern where first thing we get a dump, and then again, that V-shaped recovery. So on Friday, we were watching the 2-minute time frame, and we were saying, first thing, can the bears get follow through on any kind of pullback? Because we saw they opened the high of the day, and then we came right back down to the low of the day, but we did not break it. That's the bulls defending support, 55.01, and we bounced off 55.10, and then we saw a new high of the day. So as soon as that happens, we say to ourselves, okay, the bears have to break this support level and see a new low of the day to get any kind of momentum, and if they don't, the bulls keep full control. And then as soon as we hit the new high of the day and the new all-time high, that's the proof. All right, bulls in absolute full control. The bears got no follow through. That was their chance, and they did not do it. So there are little signals on the shorter term time frames that can tell us whether or not the bulls are still in full control. And obviously the daily time frame is showing us that with the strength of this move that we have seen over the past week plus. So at this point, There we go. At this point, there is no sign that the top is in. We know the top is going to be in the near-term future, and we're going to call it a temporary top because it's going to be healthy consolidation. We can look at the past and say, how much have we consolidated on the previous major bull runs? And the answer is a lot, but there's a little bit of difference this time around, and we'll talk about that. But we pulled back 50+% the 2 times that we've seen these monster runs. So do I think we're going to pull back 50% this time and see WEED down at $30, $33? I don't think that's going to happen unless the overall stock market sees some significant weakness to add to that bearish momentum. Otherwise, I think the differences this time around are, number one, we have the October date for first sales looming. That's definitely a factor where people are going to be looking to hold a little bit longer, at least into that milestone. And number two, institutions. Obviously, institutions are getting involved much more significantly, and I would say that the long-term institutional holdings are going to be at all-time highs, and that's going to keep the price propped up more significantly. Something that I would say, if I were an institution and I were playing this space and I was, big into WEED bulls on this move up, I would be doing 2 things. I would have a long-term position, obviously, and I would have a short-term trading position. And what I would do is once I feel that we're getting overextended, I would begin opening a short position. And I would short these Canadian MJ stocks, and then I would sell my short-term long positions to add downside pressure. So I would then be locking in profit on my short-term trading position. I would be adding momentum for the bears to make my short-term position, my new short-term position that's looking for downside, to make that profitable. And then, of course, I'm not touching my long-term holdings, as that's my long-term holdings. So that's what I'm keeping an eye out for. And we have a lot of great members that are constantly watching and updating the net house in terms of what institutions are doing. And they've gotten really good at noticing the little subtle differences in, who's retail, who's investors, or I should say who's retail and who's institutions, and the shift that goes on. What happened the last time we were at all-time high, which institution stopped buying, and then who started selling. So that's been some really useful information to know whether or not, what the big boys are doing behind the scenes. And obviously at this point, they are still buying. So what this article did is it saw a little bit of a short squeeze, in my opinion. I think we were starting to top out. We saw some action in CGC. Again, CGC is continuing to see volume that is way more significant than WEED. And the other afternoon, I believe it was Thursday afternoon, maybe Wednesday afternoon, but we saw CGC after hours with huge volume, and it was clear that the bears were trying to make a stand, and they didn't get any follow through with it. And let's actually look at that on the 5-minute time frame here, where we saw after hours a big time pullback, and here it is. And again, these are just short-term patterns that we've been playing. If you're a trader like me, I use a significant amount of my account for individual day trade positions. So I look for these tight patterns, and then as soon as the tight patterns break, there is our bull signal to get in. So I've been just trading these short-term patterns. But here is the very clear attempt by the bears to push the price down after hours. And they chose after hours, in my opinion, because volume is very, very low, and you can make the price move significantly with a lot less volume. But the bulls were right there to defend it. They bought that dip. It was a gift. I placed a bid there and I missed it, but we ended up seeing the bulls significantly push the price back up, and like it never even happened. So I do believe that there are shorts that are getting squeezed a bit to a certain degree with this continued action. And I do believe that the article Friday morning was another reason that trapped even more shorts and kept this move going. So at this point, what am I looking for to indicate that the top is currently in is a break of this support level. Right now we have a clear hourly bull flag attempt from the afternoon of Friday, and then after hours the bulls saw some upside. CNBC was talking about CGC options and just getting some more attention on the space. But if we see a break of 44.22, that to me is going to be the first signal that the top is temporarily in. I personally, as a rule of thumb, I do not trade against blue sky bulls. It's just a scenario that way more often than not is going to save you money. And I have a lot of rule of thumbs as a trader. I'm not going to short something that's oversold, and I'm not going to go long on something that's extremely overbought. These are things that I use just as a general rule of thumb to eliminate decision making. I don't have to make that decision and put myself in a scenario where there's no resistance. The bulls have complete control, and I'm trying to fight that. A lot of shorts are getting burned. It's fine to open a short position, but you have to have a very close stop level nearby, and you have to get stopped out as soon as we see continuation. So if I were going to top fish this play, I would look for a bearish entry perhaps around 45.80, and then I would just exit at 46 breaks. So at this point, we know there's going to be a solid pullback. We know it's going to be 10 to 20% at least, and that's what bears are looking for. But again, there's no follow through at this point. So if we break 44.22, that's signal number one, and then we're going to look down to the low. Let's actually do the WEED numbers. And then for those of you that are trading CGC, you can just apply it across the board. But we've got 57.60 as the higher low of support. If we lose that level, we're looking down at 55.01, and then we have clear hourly higher lows to be watching the entire uptrend. So the exponential moving average here that I'm using is the 12 period. This is something that I've been using in cryptocurrency for the last year and a half. It's gone really well, and I'm just starting to apply it to stocks and watching to see how stocks respond to it. And it's a nice little guide here on the hourly time frame. So basically, the bulls are in full control unless we lose this support level. And if we lose this support level, it is not game over temporarily for the bulls, because again, we continue to see these institutions buy the dip and throw these bear breaks out the window. So we have to remain cautious at all times if looking bearish. For me personally, I am all cash heading into the weekend. We're probably going to see a little bit more follow through, just judging by what was happening after hours. The stock market, S&P 500's at all-time highs on Friday. So there's still bullish momentum. I'm personally playing a game a little hot potato. So I'm playing these short-term bull moves, but I'm locking in my profit constantly on the way up, again, to avoid the downside 10 to 20% slide when it does inevitably come. So at this point, if we get a bull break, 59.80, we're looking at 60 psychological. That psychological round number might be a level that people look to take some profit at. And then we'll just look up at 61, 62, so on and so forth. APH, same thing, except a stronger close. And this momentum, again, it was the most bullish name on Friday due to the most likely scenario that they're going to get this alcohol deal. So hourly time frame, we don't really have a clear support nearby. We have one all the way down at 13.11, and that's the one that we're going to be using to go off of in terms of support. But other than that, after 13.11, again, there's a lack of support because of how hard we ran. So I zoom into the 15-minute time frame to see more support levels. I can see one here at 12.70, but even the 15-minute didn't see much consolidation. So this is a very important 13.11 short-term level, and we'll see if the bulls can hold it and break 14.14. If we break 14.14, the next resistance level that we're looking up at is going to be up at 14.25 and 15.17. Starting to make some significant changes in trend here. We have broken the weekly lower highs. That's very notable. To confirm the weekly trend change, we're going to need weekly consolidation to form a higher low and then continuation back up towards that all-time high. So that's what we need to confirm the trend change. The odds of the trend changing are now a lot more likely than not because we have broken the lower highs, but we do still need a little bit of proof and follow through for APH. ACB, hourly time frame. Support, this is the laggard of the major four in terms of it took the longest consolidation period here to get going back again, and we haven't broken to a higher high yet. It's very clear that ACB is struggling comparative to its peers. So we're looking down at support on the hourly time frame. 837, 795, 783, 766. So there's clear higher lows to be watching, and the most important support level on the daily time frame is 766. Some names, like ACB, have formed a daily higher low already and are trying to see that continuation. Obviously, WEED and CGC have not even started consolidation on the daily to see that kind of pullback. So that's what we're looking for on ACB. If the bulls can break 875 and see follow through, we're looking up at 9 psychological and then 952. And again, on the weekly time frame, we're not changing the trend, and we're not close to doing that. We'd have to break 1072 to see the same kind of bull break that APH just got. And obviously, that's a very significant, 25% from where we currently stand after already seeing this bullish momentum and still needing 25% to break the weekly downtrend. Obviously, we were at a much weaker starting point, and there's a lot more work for the bulls to do. Cron, I love this daily and weekly chart. It's my number 2 favorite. As far as major names in the Canadian MJ space, we saw a brief daily consolidation of a bull flag, big time continuation. Again, we're getting the news priced in to a certain degree of the market anticipating investment coming in to Cron. Keep that in mind. But here's Cron with very limited resistance. If the bulls can break 11 or make that 13.15, we're looking up at 13.39 and then the all-time high. So we're very close to all-time highs on Cron. Certainly within striking distance, we have blown through a bunch of resistances on huge volume, and it is definitely a very strong daily and weekly chart. As far as support on Cron, same thing. Hourly time frame, 1264 and 1257 are the first 2 levels. If we lose those levels, I then zoom out. So if we lose the hourly uptrend, I zoom out to the 4-hour chart and I say, what does consolidation look like on the 4-hour? And if it's nice and healthy, then we say, all right, the bull move might not be done even though we lost the hourly uptrend. And then the same thing, if we lose the uptrend on the 4-hour, I then zoom out to the daily. So I'm constantly shifting time frames to watch the trend. Did we lose the trend on the 15-minute? Then I go to the hourly. Did we lose it on the hourly? So I just am constantly scaling out my viewpoint of things to see how significant the consolidation may be. But you could see WEED, at the end of the day, Friday, we lost the uptrend on the 15-minute time frame. And you might say, well, now we're ready to pull back. But all you have to do is zoom out to the hourly and say, well, that's really healthy consolidation on low volume compared to the bull volume. That's a potential bull flag. And then to go to the 4-hour and say, we haven't even started consolidating on the 4-hour yet. So overall, I do believe that the initial consolidation that we do see is going to be healthy. I do believe that there's going to be aggressive dip buying. So that's, again, another reason I don't think we're going to see WEED and CGC pull back 50% like we've seen twice. I think it's going to be more in line with 10-20% for the reasons I stated earlier. TLRY, also beautiful, and just a wild roller coaster. So we posted the video about getting interested in TLRY when MJ, the ETF, started buying right before the sector dumped. It looked like terrible timing. And then, of course, it was perfect timing with this huge follow through to all-time highs. Citron has now put out a tweet on Friday that they are exiting their position. Things are too overbought too quickly. So that's something to be aware of. Daily higher low of 36.60 is support. All-time high 44.37. And then we just look at psychological levels 45, 46, 47, so on and so forth. Hourly chart has not consolidated recently. When TLRY pulls back, it's going to pull back harder than most and faster than most, in my opinion. And that's the reason that we're going up so strong is its blue sky breakout and its recent IPO with a lack of price history. But that also means we have a lack of price history as support on the way back down. And these names usually see the most volatility. So I would keep an eye out for that pullback. And again, this is the kind of scenario where I would absolutely be looking to protect some profit on these names when we do see signs that consolidation is coming. Whether that's, if you're long, obviously don't touch that position. That's your game plan. But I would always want to have some kind of long position and some kind of shorter term position to be able to just sell and reload with more shares and compound profits heading into the future if looking for, bullish upside for the next few years. So TLRY, 15-minute support, because I can't see much on the hourly. I'm looking down at 44.60, 44 even, and then a lack of support to 41.89. So 44 even is an important short-term support for me. Then we have the laggards. Some of the smaller names are seeing this upside now. We saw the same thing in the USMJ run back in 2013 and 14. The leaders of those sectors, which are a joke at this point compared to Canadian names, I was waiting so long for legitimate names to play, and I appreciate you Canadians for filling the void, because I was trading known scams, and I was flipping these companies that were, again, $500 million market cap with nothing behind them, and I knew there was nothing behind them. I want to at least have some kind of security knowing that it's a legit company, and that's what we have in this instance. But I lost my train of thought. Oh, the laggards. So the laggards, we've got these smaller names now running. The leaders run. We see people take profits in the leaders, which we aren't seeing yet, but I'm watching for signs where we might see profit in the leaders and then some of these laggards run. The correlation to WEED for the individual names is going to be very notable. If these small names pull back with WEED, then we'll say, all right, we don't have much of a laggard situation. But if there are names that can hold up and not see consolidation, when these big names see consolidation, I do believe we are going to see profits dispersed into these smaller names in the sector. So KSHB had a beautiful bull break of a tight daily pattern, and we watched this equilibrium form for 2 weeks. And for multiple days, I was highlighting this every morning and saying, we're watching for this equilibrium to break. Keep an eye out. And we got the bull break of 429. And now we have increasing bull volume follow through. So from 429 up to 465 with the close, that's obviously a very solid profit of 7.5% or so in just a day or two. And we're seeing this in the smaller names. Look at TGOD. TGOD was in equilibrium on the daily time frame. It got really tight. We actually had a little bit of a bear break on Wednesday, but big time follow through. We finally broke the lower highs. We had very clear daily lower highs. We've been watching this pattern for weeks looking for a trend change, and note that it is happening delayed. So obviously all these other names have been running for 5, 6, 7 days, and now is the first day that TGOD is running. So again, keep an eye on these smaller names, and Fire even is getting in on the action. Haven't heard that name in a long time, but we are seeing everybody's looking for, the small name that's going to get bought up or going to see a big investment and going to see the biggest risk to reward return for profits. So T-God bull break, we're looking at resistance of 583, and then I'm looking up at 6 and 609 as the next two levels. So hourly support for T-God, we need to establish a new level. We just ran straight up on the hourly time frame. There's no support nearby. So we need healthy hourly consolidation to form a support level. And then we'll use that support level to ensure that the bulls keep the trend in their favor. So again, congrats to the bulls. And at this point, stick to your game plan. Ideally, you have a game plan all figured out before this move even happens, or you're adjusting your game plan to the changing market conditions, but just doing so in a very level-headed, no FOMO way. I have some traders that I'm teaching to trade in person, some friends, and I can't tell you how hard on Friday it was to keep them from establishing long-term positions in this sector. This is not the time to establish long-term positions. You want to wait for daily consolidation to do that. Again, if we pull back 50%, the two previous times we've seen moves like this happen, we can anticipate that we can at least get 10 to 20% cheaper from where we currently stand here on Friday. So again, tamper those emotions and stick to the charts. Hope you have a good weekend. We'll be back at some point.